Karen 1 second.
I've truly debated how to present the office. Usually, most of you have been around the block with me, and I kind of go over the numbers, and here's where the numbers sit. And here's, we kind of focus on that. However, this year's audit was, I'll say, rough. We had material weaknesses in the report this year. We had significant deficiencies in the report this year. And I think we should focus on that stuff. And then if you want to come back to more of the numbers and other things, we can go that way. So I want this to be an open two-way dialogue. If you have questions, please ask. So I'll start with taking on unmodified opinions so you can apply with all legitimately accepted accounting principles. We took a sampling of transactions, we don't look at every one, and they're your statements, not ours. With that being said, we had to get an extension for the audit. You were not ready when we walked in the door. You weren't even close to me. I want to go this way. I think Frank is the person to be here now. He just needs time to get things going forward. He needs to finish learning, digging into the issues that have presented themselves over the last year, and kind of sort through some stuff. And there's going to be stuff that is going to come out in the financials as we untangle some things, because there was, as you go through, you'll see what I mean here. So let's get to that piece. So if you look at page 117.
We don't have that.
As we go through, Frank, if you want to step in and talk about stuff, feel free. So when we talk about comments, we have, here's just a general comment, and the next level is a significant deficiency. The next comment is a material weakness. There's something seriously wrong, and then you have a unmodified or a modified opinion saying we can't even rely on the numbers. We were able to get, when we walked in, we were at a modified opinion. We couldn't rely on the numbers. We got it with greatest help from some staff to the point where we could actually issue numbers with some confidence in them that they're correct. The number one thing is bank account reconciliations. Bank accounts are supposed to be reconciled within 30 days of getting the base. When we walked in, there was major bank accounts, like the bank pool cash account, that had been reconciled for almost a year. If cash isn't reconciled, nothing else is right with financials. I'm just going to be blunt, because we were finding significant journal entries in going through and reconciling this base. That is the number one priority, is looking at those bank statements, because there was quite a few journal entries in there that significantly changed the books and the financials as you go forward. The next big one, final reporting package that the board gets. You should have a nice package coming out of the system saying, here's your balance sheet, here's your income statement, budget versus actual, here's the bills that you're paying. What the board was getting was not even close to what you should have been getting last year, and it wasn't even close to being accurate in some things. So if what you're getting isn't right, you as a board can't make proper decisions going forward because of all the moving parts. The third material weakness we have is tax disbursements and supporting documentation. So the compliance with when you're collecting property taxes is very simply what you collect from the 1st to the 15th is distributed by the end of the month. The 16th through the end of the month is distributed by the 15th of the following month for all those taxes. With support backing all of that, here's what we collected, here's what we owed. That was not being done. But two disbursements,
I'm not sure of the exact number of disbursements off the top of my head, but I know that we went quite a while without dispersing. We were having trouble, and by I say we, I mean as an organization. I, of course, wasn't here at this time. We were having trouble tying what we use as a quick disbursements report out of the system. That's kind of where we start, and we were having trouble tying that to the bank and what we had collected. And as a result, we held things up for, I think, a couple of months.
and even at the end of the line. So the tax, we'll go down the rabbit hole a little bit. On July 1st, the first summer levy goes out. December 1st, the second levy goes out. Everything goes to the county March 1st, clears up. By the end of June, you should have nothing left in that tax payment. Which all we've had, I'll turn it over to Grant.
There was hundreds of thousands of dollars left in the undistributed collections account. With the help of Anderson Tackman, we were able to get that down to about $100,000, but there is still a residual balance of undistributed collection, which we're trying to go back and reconcile. I've separated that amount in our books so that moving forward, we can have a clean slate and balance. And per Mike's recommendation, as I have time, I will go back and try to chip away at that number.
Going forward, those are our material weaknesses. Now we kind of step down, we got significant deficiencies. We help put the report together. That's in here every year, that's fine. That's what, when we walk in, we should have all these statements for us. We can help put together, throw together. When we do, we just have to note it, so I'm not worried about that. The next one was a little concerning, is approval of disbursements. So your city's paying bills, all the bills should be coming to the board for approval. We know that that was not happening during the year. There was, as we were testing our controls over the cash disbursements, we had at least 2 issues out of the 60 transactions we looked at that never went to the board for approval. So we gotta kind of make sure we're capturing all that data coming to the board for.
Now that you're talking about, excuse me, you're talking about at the administrative level. The board sits monthly or every 6 weeks and goes through all of the disbursements.
You weren't getting.
We weren't getting them.
You weren't getting them.
So he's saying that they were sitting in the finance office and not getting pushed
Gotcha.
into the
Okay.
packet for
I
review.
just wanted that clarified. Thank you.
Yep. Also, we were noticing with disbursements, the amount of the invoice wasn't matching the amount of the checks that were being paid. There was discrepancies there also. So, yeah, that's what I'm saying. I was trying to figure out how to even present this going forward, and that's where on the next page, obviously with all the journal entries, there was places where the budget ended up overspending the budget items and coming from different journal entries. That's the short version of the stuff. I think looking forward is, I think is gonna need time to settle in. And we had discussions of, in a way, you have to draw a line in the sand and look at, okay, I can't let the future get lost by picking out pieces from the past. So focus on going to the forward, getting stuff right and corrected going forward. And then as you have time, go back and untangle some of these issues, because there's still over $100,000 sitting in the tax account. We still have to figure out who it's due to. We're not 100% sure. Property taxes, for those that have been around for a while, this is going back to the dredges, what we know what happened is taxes weren't being dispersed timely, money got paid to the general fund instead of the DDA. Now you have that going back to the DDA that you're paying for because the disbursements got jacked around. We might have that as we pull some of this stuff together and out of taking back. But he needs time. And it's not going to be a quick boom, boom, here it is. So as the board is looking at Grant's responsibilities and the help he's having, you're still at least one person short of leave. And plus, doing the day-to-day plus working on the back stuff, you have to look at what you're getting and going forward. And one of the things I think of off the top of my head is, as you're going forward with some of these new grant opportunities, the board might want to look at hiring a grant administrator or somebody like QPAD or something to manage the grants instead of normally you would have the finance person grant do it. But he's going to be busy trying to get all the issues untangled over here. He's not going to have time to do special projects and administer the grants and do the things that they need. So you might need to look at this other avenue for a short term of, okay, he's cleaning up the mess, plus he's doing the job of 2 people easily. And then if you're going to have him work on some of this grant stuff at the top of it, he'll never.
I think that's an excellent idea.
So to be clear, we have hired grant administrators depending on the value of the grant. So the $16 million sewer grant has a grant administration portion of it with UPEA, and then we have some oversight of that, obviously, of the prime. For the CBDG grant with the senior center, that was all QPAD, but there's still administrative roles at the city. So there is still a city function that has lines of accounting, because it can't rely on a contractor for all things city. So we have been including administration of the grants in the grant applications.
And I also just want to say one other thing is I think, we need as a council to really put that line in the sand there and let Grant, do his thing. He's doing a good job in my opinion, but, so we can't hold the past against him. So I just want to make sure I said that because he's doing a good job.
Yeah, honestly, if Grant wouldn't have been here, I would have walked out. I would have said, we can't audit you, you need to bring Plant Brian back in here, you need to do something to get the books squared up, because they're nowhere near the shape they need to be to have an auditor for. And I go back to just step 1 on the bank account side of it, reconciled for over a year. That tells me there's other holds out there, and until they get, it's a big puzzle. You gotta start untangling it and see what's there. And there's gonna be stuff that's gonna come out still, because I don't know how far you've gotten on fiscal year 23 yet, but we're in July and we're still working on 22 notification.
I am happy to report that we have all of the bank activity reconciled through May, and the tax and common account reconciled through July 31st, and I have lowered down our unexplained variance in the common account to $60, which would sound like good news, but the fact that it's so low is alarming to me, so I'm sure that we'll flush something out. But we are, just so you guys know, that's been, why I've been here so late is I take time after the normal day ends to go through the bank
2 a.m.
recons.
Yeah, because
Yeah.
that number was the 6-digit number when we started. Just in the regular common bank account that we're trying to piece together. And the problem is, there's pluses and minuses in there, so it wasn't, it was this, it was this. It was going back for quite a while. And on one hand, I know there was turnover. I truly understand that. And on the other hand it's a difficult time, but watching and making sure stuff gets done, that's a hard job. So a lot of what I can see here is, if we go back to when Jim and Caitlin were here, they were here, they knew the system, they had the process rolling. They left, they all took other jobs. So, you had plans in here, you hired somebody else in here, you had some turnover and rolling and learning, and it kind of shows how fast things can snowball as things happen. So during turnover time is, we almost have to put a height and aware of, hey, we need to be a little bit more diligent, we need to look at things, ask a little more questions going forward. And from the board standpoint, you're not in here on a day-to-day basis either, so you're not seeing, okay, what's done, what's not done. We're just assuming that stuff is getting done like it has in the past. So kind of reconciling that, noting it, okay, how can we keep that going forward? And that's what's like, okay, let's draw that line in the sand of saying, okay, how can we keep it from backsliding going forward, especially with one person in the job.
One question I have, and it's kind of down in the dirt, but it has to be asked. It seems to me like there was some gross negligence in here, in that office.
Yeah.
Because we had multiple people. And like you said, if we had Jim left and then Caitlin left shortly after, that should be a line. Because
Agreed.
then Plant Moran came in and
Things were
charged a
clean.
ton of money to see that we were doing the right thing. And I look at that as part of our due diligence. So we got this company in, nationally recognized, they're gonna get in, we've got new software that they can pipe right in to look at our books. So I think we need to account for the timeline
Absolutely.
as to where things went south on us. And
But
if we need to follow up.
in my reading of this, correct me if I'm wrong, things were okay under Plant Moran, correct?
They were not perfect, but they were better.
Okay.
So when Plant was here, I think the biggest struggle was what was their role of, they're not here doing the day-to-day stuff. So they're kind of over here, you give them a list of, here's the 5 things to do, they go and do those 5 things. And they're not your CFO, so they're not drilling down and saying, well, is all of this right? Are we getting all the disbursements? Are the financial statements right? Because that's not their role for when they were hired.
But doesn't that show, even at their level, that there's inadequacies?
So some of the stuff that they were pointing to, right, one of them was we had just switched from Encode to BSNA. That was the first year of doing an audit in BSNA. And even Jim had been doing extra steps in BSNA because the training was supposed to be in person for all staff, and COVID hit. So the training was remote for just Jim. And then Jim was trying to bring in the opportunity to do training and go back to the standpoint of one person trying to do all things. There's not a lot of time for him to turn around and train staff. So there wasn't a lot of training. So then enter Caitlin in questions, and Sarah transitioning, and Sarah would try to understand some of the BSNA, and Caitlin showed her what she knew, but it wasn't a lot. And so there was a lot of, when Plant Moran was in, back to the task, their task was to do audit prep. But as they would find something, they would ask questions and people weren't sure where to even go look. So they were even doing some training for staff on the BSNA. But if they didn't get to a specific point of training, there was a loss in knowledge and skill set. And so there was a time at which even Plant Moran was like, hey, you gotta do some stuff, but we can only see this limited. And the indication was that from the staff down the hall, there was enough understanding they were doing it correctly. With some of the things they were doing, it looked correct at first glance, but it was in the wrong account, or it wasn't when it wasn't being reconciled. There's things that disappear to a non-accountant or a non-CF, finance person in the system that you wouldn't see. But there were also some glaring things that we probably could have all picked up on some of the monthly reports that we missed. And so we got into a routine of looking at things and feeling confident by the statements and the confidence of the statement that we may have even overlooked some of the details ourselves. But Grant was digging and is still digging, trying to figure out like, what's the linkage? Like it says it went here, but there's no match. And he's trying to figure out like where the match is. He's digging into all these other buttons in the system, trying to understand where the match went and how to reconcile that. So
It's like
there was
tracking down a bunch
there
of
was an
emails.
account created for a project that didn't need to be created, and then there was a charge to that, but there was never a revenue into it. Like there was just weird things that were being pushed, sort of like they knew what they were doing, sort of like it was showing correctly, but then it wasn't reconciling out. And so I'm not sure that the transition was as clean as we think it was between Jim and Caitlin and then Sarah and Joe. It's not that clean because even Plant Moran was questioning, why did Jim do 5-6 steps? I think part of that was that training program and the way it fell through the COVID. No offense to Jim or anyone. It's just the lack of training and lack of in-person training limited the capability set. So as you figure out how to do something and you're like, oh, I know if I do it this, and this, it works out. That was what Jim was doing. But Caitlin's figuring out, oh, if I do it this way, it works out. And it was working out. But their steps were different and they were bringing it all together. And the two of them would generally be in the same room talking. But then Sarah comes in and she was getting a little bit of Caitlin and a little bit of Joe, but Joe wasn't picking up any of it. And it started to fall and spiral and snowball out of control. And then they would come into a meeting and give us a confident statement, and sure enough, it looked real, it felt real, but it didn't test out to be real, right? The thing I think is most important, and I think Mike said it several times, is we've now got someone that is trained in understanding this type of system, has experience in this type of system, has limited experience in government municipal accounting, but has a lot of experience in utility accounting, which is not very dissimilar. And Grant was the one that identified within the system some questions and raised some flags. And then we took action to start correcting all of those things. But it takes time. You can't fix them all immediately. Grant has done a ton of work, and he has worked to 2 a.m. on some days, and he's worked long days and many days at the demise of his not spending time with his family in order to be committed to the new job he just stepped into and saying, hey, I just took on this role and whoa, what did I get? But he's said, hey, this is going on. I need to let you know. And he's told us, we corrected it, we moved forward. He's worked very closely with Mike and Catherine, and they were very helpful in making sure that we were able to get through this audit and get through on time with our audit extension. We have a path forward, and yep, we are acknowledging that there were mistakes and we got to figure it out. But it's us together working forward, understanding the challenges. What I don't think anybody's ever identified, and correct me if I'm wrong, is we don't believe there's any malice intent or misuse of funds or anything that we can point to that is feeling or sniffing or insinuating that there was criminal activity going on, and that the budget is in fact wrongfully managed from points of controls within the system, but not deliberately or maliciously affected in a way that there's huge losses of funds. We have the funds, we just have to figure out where they go to. We have to figure out where the linkages are and correct those records. But Grant has done that with a significant number of those records and has brought many of them into tolerance. And as Mike was saying, he's not sure how we get through July. Grant's already got us through to June in some and the end of May and others. And so we are catching up. Grant is doing all of that. We've got to get those controls in place. We know what the controls are, they're in place, and we just now have to train it. We have some qualified applicants to interview for the treasurer position. That's a priority for the office to get that filled. And so, yes, it's ugly. It is terrible. It is wrong if we don't have this open opinion.
You say there's no malice, and I agree to a point.
Yeah, I do.
But there's malice in the fact that we had people assigned to a contract to do work for us, to prevent us from going down this rabbit hole.
Well, they did that in the end of 21. And then their contract at the end of that audit completion was
Plant,
essentially
we're talking-
over. Plant was over. They were for audit prep for 2021. And we're talking about 2022.
I thought they were like a stopgap more than a.
No, they had a little bit of service at the beginning of the year, which was pretty much lining stuff to the beginning up to a point where they had bank reconciliations and could do things. And there was a point at which their contract was terminated and they stopped and we moved on to our staff.
Lindsey, Grant.
I think there were some council members who were looking to speak first.
Yeah, I guess where I'm getting caught up in all of this, that, we're looking for why the accountants, didn't catch some of these things and we paid them to do that. The understanding is the accountants, and if I'm wrong, correct me, the accountants can only look at what's presented to them. Okay, so if they get a full presentation, then they can audit a full, correct presentation, but it's my understanding that they were just getting little pieces here and there, and then that's what they were checking on, auditing, going through.
Are we talking about Anderson Tackman for 2022? Or are we
I'm
talking
talking
about Plant
about-
Moran for 2021?
I'm talking about this company currently, right? It's audited what is presented to you, correct?
Right, so, then I'll let Greg go. It is, when you look at it, as Jim left, Plant came in and closed the books for 22. They were here for a while in 22, looking at 22 stuff. And they had a narrow focus. What my understanding is, here's the few things they were looking. Here's what they were engaged to do. It wasn't the whole picture. Then when they left is when the train really went off the tracks. At that point.
So I don't know if you're fully aware of the transition that the finance office has had over the course of the past
I am
2
fully aware of that. I'm just I'm asking questions to answer
Sure.
what I'm asking, okay?
Sure.
I understand there was problems and issues and it's no one's fault and all of that, but I just am getting the impression that we're trying to just smooth over this and let's move on and everything will be fine in the future. We do have to look back and see how we got into this situation this deeply. And I'm an outsider here, you're right, I haven't been here, but I've run a business. And just to be quite frankly, this is not the way you run a business. I can't get to the end of my month and buy inventory with money that I don't have. I mean, that's just basic math. And I read this. I read all of the information at the end, and it's saying that we're not running our business the way we're supposed to be running our business. We're not monitoring, my money as a taxpayer the way that we should be. And
That's exactly what it says.
I
And that's why we're here
don't-
talking about it.
exactly, and I'm allowed to speak my piece on this, and that's what I'm saying. Some of these questions have to be answered so that we can all understand what's going on here and not, and how it's gonna be changed in the future. I mean, I feel like our last meeting, we made budgetary decisions based on incorrect budgets, incorrect information. We didn't know how much money was going out for raises. We voted on stuff for the future, the next budget, and we don't even have this budget straight yet. It makes me feel like we need to revisit that now that we have an audit and we know where our money is and where we're going. But that's, that's where I'm at as far as, where our budget is and where our money is. I
And-
mean, we made promises to the police department that they could have a new vehicle. And I look back in the old budgets and it was budgeted for them. And then we have to come forward and say, no, we don't know if we have your money or not.
Well, and to Renell's point, also, you said you guys have audited, you haven't audited everything. You get a sampling?
So what we do is we take a sampling of transactions and we look at how is that going. And then that's on step one. Step two is we start looking at the balance sheet and we say, okay, does cash reconcile? Can we find support for the receivables? Can we find support for the payables? Does this make sense? Do we have support to back these numbers up? And we have what we call materiality of, for lack of a better term, close enough. Okay, here it is, we have a little bit of a difference, but it doesn't materially affect the financial statements. So I'm feeling pretty good with those numbers. But then what happens is, as Grant's untangling some of this stuff, there might be stuff that got missed because we were undigging so many different things that come out of the woodwork of, oh, well, here's a receivable that we didn't book to last year, we'll report it this year, because it got missed because we were trying to figure out all these other lines. So from a budgeting standpoint, I think you can take what's in here for 22 and say, okay, yes, these are good numbers, and going from there. The question I don't know, and this Grant stepping in, is how much of 23 have you combed through to say, yes, the numbers are good, no, I have questions in these areas, where are we at in that process? Because the whole focus when he came in was, okay, let's get payroll and AP out and paid so vendors and employees get paid, and let's dig into the back stuff. So how much of 23 has been looked at and cleaned up?
Grant, can you answer a quick question just for me? So I know where I personally will draw the line in the sand, but when were you hired?
So I was hired, my official start date was April 1st.
Okay.
I was here for 2 weeks in April to just kind of roll payroll forward. I had a family vacation, and Craig and the council and everybody allowed me to go to the Michigan Municipal Treasurers Conference for training, which was really great at the end of April. So really, I kind of started here full-time in May.
May. Okay,
So that
perfect.
kind of, I guess, answers, because I guess as I'm sitting here, what's going through my mind is, when was it uncovered that there were all of these discrepancies, and how many meetings did I come to where information was presented to me where it probably wasn't right, and some people knew that?
So,
Thank you, Des, for
so
that question.
Grant uncovered things and presented them to me on June 8th. So I was downstate for the CEDM conference, and I had left some detailed notes for Joe to run the meeting, and I had Grant specifically take over the finance portion of that meeting so Joe could be focused on the city manager. When I watched the YouTube version of the meeting, I asked very serious questions of Joe during that drive home and when I got back. And Grant asked to see me the next day. And within 3 days, Joe had been encouraged to depart. And he was given 2 choices and he resigned, knowing that it was tied to his inexperience and knowledge base. But it took about 3 business days to have that conversation from the time I was aware of the circumstances to the time that he was off the rolls.
And then in our July meeting, I know that we presented you guys with some financials, and I tried to preface that we were going through a lot of changes. I tried to do my best to map out how the beginning balances for the year had changed, that, of course, we were under audit and things were changing rapidly. I think last month too, that was the reason we wanted to try and push budget amendments to September. To get back to Mike's kind of question where he left off, to me, the order of things is you do your bank account reconciliations first. Those are what are tying your books into reality. And then you can go back and start to look at things like coding. Is the coding correct? Was a supply put to a professional service? And then that's where you can start to work on your budget amendments. What we're doing moving forward to address these things are just the very basic bread and butter accounting. It's bank reconciliations, it's account reconciliations, it's payables controls, it's proper sign-offs. Has this good been received? Do we have a packing slip for it? Has it been signed off by somebody with purchasing authority? Has it been presented to the council prior to it being paid at some point so somebody can look through it? That's the path forward. The good news is that it's a process that's repeatable. It's relatively simple at the ground level. It gets really complex when you stray away from it. To answer your question, a lot of what I can see, as far as like looking back in the bank recon history, things started to go off the rails really after Plant Moran. If you look at the bank recons that Plant Moran did, they were okay. Plant Moran did have full access to our accounting systems. They could take a look at anything they want while they were here, is my understanding. Obviously, that was before my time. But this is going to take time. There is a lot to untangle. I am a new finance director, and I'm also a new treasurer. And so I'm human, and I appreciate everybody's patience as we work through this. But I think that there's a process. I think we can all trust the process. I told Mike, I tell Craig every day, I come in, I look at what are we going to do today to move the ball forward, and we do that. And then we come in the next day and we move the ball forward.
Sorry,
Very
so
good,
just to be clear on timeline, so Grant told me about the errors on June 8th. I met with him on June 9th.
After
And
that
then,
council meeting,
right,
yeah.
and then the 10th through the 13th was coordinating some things to make sure that we were protected. So I was coordinating closing access to accounts for the individual that had questionable activity. We had 906 doing backup of all files in case there was a need for somebody to try to clear their emails or any kind of records. And then on the 13th, I met with Joe. And while I was meeting with Joe, 906 was on his computer, backing up everything that was physically on his computer that wasn't on a server that they need to have remote in access. So we protected all of the data before that notification so that there wasn't an indication that anything was coming. So there wasn't any indication. If there was anything nefarious that was occurring, we would have the records because we didn't give them the lead into understanding it was coming. And then that meeting was on the 13th and he resigned on the 14th. So it was more than 3 days. I apologize for that count, but it was about 5, I guess.
Lindsay, you had something you wanted to.
I was just gonna ask, and I was gonna ask it before, and Pat had sort of gone there a little bit, but I just wanted to be clear that, so those were all protective measures upon his departure, but there wasn't anything that was found to be nefarious or malicious, just negligent. There wasn't anything that was.
Inadequate work.
Yeah,
Inadequate work.
but there wasn't
Yeah.
anything that was intentionally or, as you said, criminal in any nature.
So going through 21, as far as we can tell, everything was, we didn't find where money went missing, as everybody, you know, I don't want to use, I'll use the word. We didn't find fraud
Okay.
as we go through. We don't have to, quote unquote, find it as we're doing the audit. It's one of the, as we're doing the audit, if you run across it, we have to inform everybody, and then we have a whole different discussion. So we don't see where money left the city and went into somebody's bank account, or bills got paid and money went to somebody else's bank account, or we didn't find that. What we found is, if I sum it up simply, is once Plant Moran left, everything went off the cliff at that point in time.
And Grant is helping us climb back over.
And I guess when I say what you're getting for board statements is incorrect, I'm gonna go one way and then I'm gonna have Grant step in for a second. So what I'm saying, if the bank accounts are being reconciled and we're finding all these adjustments, what they're presenting to you is missing all that activity, for starters. Then Grant, why don't you kind of say what you found in some of the statements?
So one of the key issues that led me to ask if I could meet with Craig was that when I had to cover for Joe for the June meeting, that was the June meeting, correct? Yes. I had begun to familiarize myself with his report that he was presenting to you guys so that I could speak intelligently on it. And as I started to dig into it, I was having trouble balancing what his report was saying back to our general ledger. One of the issues we were having is we actually had a software error that occurred in a prior period, and that was throwing a balance off. And I thought, okay, maybe that's it. I accounted for that. I've corrected that software, by the way. I accounted for that and went back. The numbers still didn't quite match up. So I approached Joe and asked him about it. And he did not seem to know how to reconcile the difference. So I immediately went back to my desk and tried to re-prepare the report, which is what you guys were presented in June, which was me redoing a report that Joe had based on the numbers that I had seen in the general ledger. Now, the numbers that we do present to you guys are unaudited, so they are always subject to change, right? But there should still be a standard of accuracy there. And the other thing, as I dug into it more, was that there were some basic, just like arithmetic errors. Beginning fund balance plus net change did not equal ending fund balance. So there's some things like that. And then I think some misuse of like your pooled cash fund doesn't really have equity, but you reported that there was equity in the pooled cash fund. So you guys should really be getting a full list of funds, a full list of statement of revenues and expenditures, and then the full disbursement list with every meeting, right out of the system. I know it's not pretty. I can continue to do a highlight like I did last meeting where we have, here's some highlighted funds. You guys have decided these are important. We want a nice printout, but I'm going to continue to provide you with the printouts from BSNA, which are untouched. And then that's there for you guys to review and familiarize yourself with.
The other thing, Your Honor, if I may.
Yep, absolutely.
The thing that I think that we've gone down the rabbit hole pretty far now, but I think the thing that it was a perfect storm. We had COVID, we had people leaving, we had people coming, we had the BSNA software. It was just a lot of wrong stuff that allowed this to happen. What are we doing going forward? Heaven forbid Grant doesn't make it to work tomorrow. What are we doing to safeguard until the next time Anderson Tackman comes in?
One of the things that Craig has encouraged me to do, and that I'm working with my staff on doing, is process mapping. which is leaving a breadcrumb for future notes, printouts, screenshots. Sarah, when she was here on the payroll process, left me a wonderful binder. She put together a great process map for the payroll process. And it allowed me to come in and take over the payroll for an entire city right then and there, first week, go. It was very great. So hopefully, as we go through these things, we map out the processes and the ways that we get to our desired end results. But there's still that area of expertise. You should always have an accountant, somebody with, some sort of accounting training or experience in the position. And furthermore, governmental accounting, it's kind of like its own language. When I went to school, Northern, I think, offered 1 or 2 governmental accounting classes. It's a very small part of your major. So again, it's very difficult if there's no legacy employee here to come in off the street and just get it, because there's so many nuances to government that don't exist. Even at the Board of Light and Power, we have a slightly different language of accountancy here.
I think the other thing to kind of go with what you're saying, and I think this is probably, if you had to put your finger on one thing, one issue to kind of sum it up, is as you're going through all this turnover and changes and everything, there wasn't a list out there of, okay, did somebody do the bank break this month? Did somebody get payroll? Did somebody pay the IRS? Did somebody pay the state? Did the property taxes get paid? That just a simple checklist of not even, do I know how to do it? Can I do it? Of, did it get done?
Yeah.
Since Jim left her, that piece walked out the door, and nobody put that into place after that of, okay, do we pay property taxes? Do we do this? Do we get this? Do we get that? So if you wanted to put it into one piece, there was not that one guiding checklist. I hate checklists, but I'm using it today, okay, so if a grant goes out, let's just say worst case scenario, grant says, I've had enough of this, and I want to go work somewhere else. What are you gonna do as a board to put that list back in? Because it's not built yet. So Grant's putting all these processes in place. We can have all the processes over here, and it can be running smoothly with or without it. But who's over here saying, yeah, that got done, yeah, that got done, yeah, that got done? I think that's why it went off the cliff, is because everybody turn over this, that, and that, and that's where getting some sort of a list together is, okay, are we doing the basics?
So I have, I guess, a couple questions moving forward into the other things too. What are the real notes on like our defined retirement plans and the police and fireman retirement system? And then what is the
Okay,
our credit rating and whatnot as well? I want to know a little bit more about that.
all right, so take a deep breath and turn to page 73. And I'm not trying to be funny, but so in 20, so this is looking at your defined month. You got the bond in 21.
Mm-hmm.
You made the big payment in 21. You actually had a pension benefit of $975,000. In 22, you have a deficit of $3.1 million.
Huh?
You're underfunded by $3.1 million. And it's nothing you did, it's just, you did not do anything wrong.
Okay.
Okay? What you have to do is if you look at column 22, and there's net investment income. The plan lost $2 million this year. So if you take that $2 million and just think MERS is projecting you earn $2 million, that's a $4 million swing that you have absolutely zero control. So that's where I said, take a deep breath, and I'm not trying to be funny, because I know where you were going, because, hey, we got this bond to get us out of trouble, and it's going good, and I'm gonna say you're 3.1 billion liability.
Will we make that money back up in the fund, or is this something?
Yes. So if we look at the three columns, in 20, funded percentage, in 20, you were 50% funded.
Right.
You went up to 105% funded in 21. The market tanked, and now you're down to 83% funded.
Okay.
So you're still over that 80% number, so that's good. So that's what I'm saying is you didn't do anything wrong. It's just the flat out metrics of the market. So as the market does this, your plan's gonna do this. And that's one of the problems that I see with getting a bond paid off. On one hand, you get the cash there, it's good, but you're still gonna be riding that wave. So you can have a $4 million swing in 1 year just from the market. So next year, the market could be good, and you're gonna make all that money back, and then we'll be saying, okay.
But to be clear, there was no accounting issue or any question or
Thank
concern
you.
related to the
Yeah,
pension
this
bond.
is
This
nothing
was
to do
just
with
market
internal.
condition that is an
This is
indicator of
nothing
something.
internal. This is
what I
no
just wanted to
accounting. This
know.
is straight up, this is coming straight from MERS and straight up investment earnings. You lost 2 million versus gaining 2 million. That is the story in a nutshell. And I know that's not what we wanted to hear after getting that bond. And that's the problem with getting the bond is, hey.
But what was our rate of interest we were paying before the bond, and what is the rate of interest we're paying now? We were well over 8% of interest on our payments, and we are at 1.3% under a bonded payment.
And that's
So-
where when you start looking at the very top line, the service costs, and it's gonna take a little time, but in 18, you were at 202,000, 209,000, 235,000. Bond came in, you're down to 199. In 22, you're down to 173. So that's where you're gonna see that number over time slowly start coming down, as long as the market doesn't peak.
And that is the purpose of bonding. That was why we took that risk and we did that, is to lower that payment and reduce it over time. And so that's the positivity, right? That it's a market. There's positives and negatives to investing, period.
It's straight up, that's the market. And that's where, if you look at page 76, looking at the fire and police plan, you're gonna see the same thing happen here, where in 21, you had a $1.3 million liability. You went up to $1.3 million liability. So $1 million increase in the liability, but if you come up to investment earnings, you lost $842,000 versus gaining, let's just say $500,000. That's your whole swing. So you did everything right again. It's just, here's what the market's doing.
And that was not a decision. That's a Act 345 funded program, which is tied to millage, not tied to us making bonding and investment choices. That's a state act program paying those pensions. So again, market conditions, but there was no decision for us to make about it. And the payments towards those pension plans are being made by the city. We have not missed those, and they are not impacted by any action out of the accounting office of the city.
Right, and that's where MERS doesn't manage your police pension plan, but you can see the same cycle. And that was, nice might not be the right word, but it's a way to show that it's not what you did, it's just both plans are moving in the same direction because of that.
Okay, and then to my other question was, what is all of this doing to our credit rating? And what does that actually mean in monetary terms
So
here?
I can answer that specifically because we've been doing our credit rating update as part of our
Right.
our sewer grant with the CWSRF. And Grant has been working very closely with the State Treasury Office, PFM, Miller Canfield, and all of the folks that are making decisions about our credit rating and our credit worthiness in order to determine whether or not we will or will not be eligible for the sewer grant of the $16 million. Our credit rating is remained at A, and then we have gone slightly down from good to stable with the same annotations of this. They've seen all of these records. They've seen all of these same accounting things. They've approved at the state treasury level our deficit elimination plan. And
We'll come to that.
okay, but the state has looked at all of those things and our credit rating remained as A. It didn't go down. It went from good to stable. That is a degradation, but it's with a forecast that getting these controls back in place with Grant making the changes that he's been making and showing the benefits that we have coming, we have been approved for that sewer project. We have the bond agreement and the state's agreement. And so we do have those. Our rating is good. So we are recognized as having these problems. The state treasury has now required as part of this process, and Mike can talk to that, a requirement to file a long form versus a short form. And we are in the process of doing that. The letter came late this afternoon to sign that and get it back to PFM, and they're working to get, there's a system issue within the treasury that if you had a audit extension, it doesn't recognize the audit extension in the system. So you've got to get a letter from them, and then you have to respond to the letter, and then they go in and they manually override based on that letter. And so the state's working with us and PFM to get that piece of the pie done. And then we are solid and we can begin the formal process of moving forward on long form reporting and keep ourselves moving just as we're supposed to in the process legally and within compliance.
And my last part of that question was, will that affect us monetarily at all?
Monetary, on one hand, yes, and on one hand, no. So let's go this way from a monetary standpoint, and I'll kind of bring it in with the bond. So your bond rate's gonna come down, which means you're gonna pay a little higher interest. So it's gonna cost you a little bit.
Which bond are you referring to?
I'm gonna go for any future bonding for a while here.
So not the CWSRF. The CWSRF remains at 1.875. I don't know of any other bonding that we're working on, so that is always going to be analyzed.
If you go forward, it's gonna affect that a little. The other thing is because you keep short form, and I'll use this now. The short form is a one-page form that you send to Treasury, you fill out, you send it into them, a little bit of info, and they say, yes, you can issue debt, or no, you can't, without doing a lot. And because of this, you can't do that form. So now instead of taking us, I can do the form in about a half hour to send it to the state. Now, I still have to do the form, so they're not gonna like it. But now Miller Canfield is gonna have to do the long form, which is gonna take more time, more effort on their end, and they'll probably charge you more to do that going forward. That I'm not sure.
And that long form is already complete. It's just waiting for this letter transaction back and forth. Miller Canfield has everything signed. We mailed it out today. That is all completed, just waiting for this letter back and forth piece that happened late this afternoon.
Right, so you have that, you're gonna have, the audit fee went up, so you're gonna have some monetary pieces there. And we'll probably have to help Grant over the next year going forward. So that's gonna, so it's not, oh, it's gonna cost you this. It's gonna be little pieces here and there as you go through life for the next year.
So not dissimilar from somebody that has a credit score, personal credit score, and they have a financial impact and their credit score goes down a little bit, and then they have to apply for a loan and they have to pay a little bit more interest rate, or they have a harder time finding a bank that wants to finance them. It's just all the same thing. It's just in a municipal versus an individual. But what we would experience personally is that if you had a credit score change, if you're above 750, you're easy to go get whatever you want, right? But if you're below that 750, but be above 620, you're probably still okay to get in a house. But once you get below 620, you're going to a shark bank to get any money, right? Like it's the same, it's all of the same. We just don't know until we file for something. But we have not filed for any new debt. All debt that we have filed for is secure.
I believe the phrasing that is used is investment grade or speculative grade, and I believe A would still be safely within the investment grade, though I am venturing out of my accounting side of things and into the finance, but.
I'm off a little bit. Let's go to page 23, looking at enterprise funds here. So, looking at this, you know, the sewer fund, the water fund, okay. The campground, now that's gonna be something that's gonna have to be addressed here, the new campground fund, because you pay $300,000 as of the end of December here into the campground fund, but basically borrowed all the cash and everything. So what is going to be the funding mechanism going forward to pay the general fund that money back?
And so that's that deliberate decision the council made that we would take the revenues from the campground and we would pay ourselves at 3% a year for 7 years. Now, we opened late, so there's a deficit for the late opening, but we still are on track to pay ourselves through the revenues from the campground. And those were all projections, but we know that we believe those projections are conservative, and we believe that there is going to be revenue generated from the campground. We already have people staying at the campground. We'd like to have been open sooner and be full every day. We'll find out over time what that is, but that was the council's decision, was to plan for that, and we have that as our revenue stream to pay that back.
So you have that, the garbage fund looks okay, the motor pool fund looks okay, and I'm just kind of broad strokes on this. Looking at page 21, general fund, added to the bottom line, looking good. Major street fund took a pay hit of about a $290,000 loss year, but you're doing some bigger projects there, but you're still okay there. Local streets okay, public improvements okay. Senior center ended up in a deficit. Okay, so I can illustrate this better by looking at page 19. And this kind of sums up here a little bit. So it's 300, I'm gonna round it up. It's $380,000. A big piece of that is $260,000 that are showing as unavailable income. That is grant money that wasn't requested in the timely manner. Recorded as revenue.
So I will caveat that with, it was requested multiple times in a timely manner. What had happened was that there was some paperwork from the contractor that was not processed appropriately. There was some delays caused by the state in their processing. The state then said, asked for an exception and a continuation. We continued to do that. And QPAD was in all of the business of the contractor in the state, and then sometimes with Kathy, but there were some significant delays to those things, but we had made on-time requests multiple times within the timelines afforded to us, and we just got the final payment. So when that payment hits the account, it will show, but it's the way in which the reimbursable grant process works, where you file paperwork, they take 30, 60 days because they got a bunch of these things that they're looking at, and they say, oh, you got this one little issue, go back and fix it. And so QPAD goes back to work on it and fix it, and they submit it again through, you gotta get all the signatures, gotta be scanned and emailed, it's in, and then it sits for 30, 60 more days, and they say, oh, we found this other little hiccup, we want you to fix that too. And then, oh, you're past your timeline, please file an extension. And so we did all of those things at least 3 times on this grant in particular. We are 2 years past the opening of that grant, and we just got final payment this week on that money. But it has been received, it will be processed, it will be reconciled, and it will show against this account. So sometimes accounting is slow. Sometimes reimbursable grants take much longer than you want them to be. But the concern of on-time, not on-time filing refers back to how the process works and whether or not you have a grant administrator. We did. QPAD was very diligent in that. Dottie LaJoy was wonderful in all efforts for that. She was on the state, she was on the contractor, she was a little hound dog and getting after it. And we just kept getting through the system with kickbacks. So those things happen too. Even with the grant administrator, you can have these delays and these causes where it appears to be a significant deficit and it's just not having been reimbursed yet.
So that does that mean that is realistically zero, or what are you trying to say with that?
I just saw that money come through Sigma, which is the state's like payment system, for lack of a more sophisticated term. That has been sent to us, so should be good to go.
So that 380 is then 380 minus 260?
There was one more payment in early 2023, which will not be reflected, obviously, here because it's 2022, but the deficit of that fund should be zero once I record that entry. It just came in, so,
Thank you.
yes.
But that's something you gotta tell the state how we're gonna fix
Yes, of course.
it. And then if we look at,
And we have our debt elimination plan. It was reported to the state and accepted by the state.
then if we look at page 87 and kind of bounce around a little bit, most of the funds look okay, nothing's jumping up, with the exception of, if you look in kind of the middle, 2023 WSRF.
I'm sorry, what page did you turn to?
87. That fund is in the deficit. And that's a case where you're starting to pay costs for that project that are gonna get reimbursed in the future, but they haven't been yet. So that's kind of a future thing where you're starting to pay some of the engineering and some of the upfront costs for that. But you can't request that number and that amount until the project actually starts getting rolling. But that's another place where the state's gonna say, how are you gonna fix this? And you actually do get this a lot when you're starting a big project, is the upfront cost, because you don't have the revenue yet, you haven't asked for it, but it will be coming. So this money will be coming once the project gets rolling and you start bringing the money in, and we go forward with that.
And there are also grant monies that go retroactively back, even though you're billing forward, and then eventually you get a large first payment. So just to that point, that the payment will come, but it's just like what we just saw with the senior center. It's gonna be that you're gonna be behind, and the project will probably close out and be closed for a while before we finally close that. And it might be where it crosses another fiscal boundary and show a significant deficit.
Okay.
That's the short version. Does anybody want to talk about anything else?
Do you think there's anything else we need to talk about?
I think I've hit all the high points. I think it's kind of in your hands as the board of how to proceed from here of, where's the checklist if something happens? Following up on what roles are you going to put in places for, because ultimately it comes up to you of how are we going to ensure we don't fall off.
So Mike, maybe hit on one thing of how we have adapted the use of BSNA, because it is ever evolving. It's got a lot of functionality that's still not captured. But I believe when we were using Encode, all files when you came for an audit were hard copies handed to you. And now in BSNA, we are learning how and taking advantage of scanning documents, which then make the file record lookups and those auditing practices kind of get a little bit easier because you can find the record within the system if you're funneling through. So how does that change the picture of what we're doing, where we're headed?
So what that's going to help is if it's attached, I'll start there. If it's attached, that's always the fun part is grants digging into the past. Hopefully the support's there. It's a matter of, oh, here's this transaction. You can click on it, bring up the support for that invoice or journal entry that received, whatever it is. Versus if the support's not there, now he's going to have to go like this. And what pile is it in? And that's one of the things we ran into is what pile is it? Where is it? Where moving forward, as long as that stuff's there, that's going to help. Honestly, I like PSA way more than it's but I think it's going to just take time.
How long is our deficit plan, the reduction plan? Is there a time period on that to the treasury?
It depends on which fund. So for the senior center and the sewer project, those deficit elimination plans went forward 1 year. The brass wire campground goes forward into 2025 because, in my personal opinion, of the very low rate of renting a site.
So we're not, the city proper isn't under a deficit reduction plan.
Those
It's
funds.
individual funds that are.
Those funds were at a deficit and they triggered the need to file a deficit elimination
Okay.
plan with Treasury.
Yeah, it's not like before where the general fund was in a deficit. You had to make things for water and the sewer funds were an issue. It's not that, it's just those three funds and how are you going to get out of it?
And again, those grant is projecting that the senior center, while we have a year for that deficit elimination plan, is done as soon as he processes a few transactions of the last payments. And so essentially, when we get to the audit next year, that deficit elimination plan should resolve itself. The campground has a projection of us paying ourselves back over time at our rate. And we chose a rate because we wanted to be conservative in how much we might have from the campground and revenues, but also that if we had more than that, we could use that for maintenance or other parks programming while still paying ourselves the debt. And so that is stretched out to a longer time because we're projecting ourselves paying ourselves. And so those deficit elimination plans are tied to what the plan is for reducing and paying that debt off.
Okay, do any other council members have any questions so far? Okay, all right, move on to the next.
That's all.
I think
That's it? Oh, good, okay. All right, thank you.
And if any board member has questions during the year, you can reach out to me as part of it. We have to ask questions. That's what I'm here.
Okay, all right, thank you.
Thank you.
So, we now move on to public comments. Anybody in the public or Zoom world that would like to speak? Oh, is there anybody on Zoom world? I don't think so. Nobody on. Okay, Claudia, go ahead.
Claudia Barrow Street from Memphis. Monday, came down to City Hall, asked for a copy of the 2022 audit, which I received. Except there are pages missing. Some accounts for 8 years. I saved my audit, so I know there are pages missing. This ends at page 115, so there are approximately 15 to 20 pages missing. These are the pages that tell the first story. Page 16 of the 2022 audit contacting the city's financial management. This financial report is designed to provide our citizens, taxpayers, customers, investors, and creditors with a general overview of the city's finances to show the city's accountability for the money it receives. We're not providing these pages. What are you trying to hide? City Charter, Article 5, Administrative Services, City Manager. The general functions and duties, pages 15 and 16, Section 5.2. 8. City Manager shall see that all laws and provisions of this charter and resolutions of the council, subject to enforcement by the manager or by officers subject to the manager's direction, supervision, or faithfully executed. E. Prepare, submit, and administer an annual itemized budget. Keep the city council fully informed as to the financial condition and needs of the city. Are you fully informed? Doesn't appear so. City manager does the hiring. If he didn't hire someone who has a qualification, that's on him. City manager is the one who is responsible for this mess. This council doesn't even know the financial situation of the city. Yet you voted to increase wages for non-union, full-time, and part-time employees. Shame on you. The city needs to implement a spending freeze until we get a handle on what the city's financial situation is. Next regular council meeting, we should rescind the pay increases for the full-time and part-time non-union employees till you get your financial house in order. Just remember, the public is watching. Mayor Chapman, like to approach, have a FOIA request.
Okay.
FOIA requests are submitted to the clerk.
Yeah. And then,
All right, is there anybody else that would like to speak during public comment? Okay, hearing none.
Donna, I move we adjourn.
All right, all in favor?
Aye.
Aye, we are adjourned.